In 2007, when most advisory firms were chasing higher minimums and wealthier clients, Pure Financial made a radical choice. They would build their entire business model around serving the mass affluent. Even more unconventional was their decision that the firm, not the individual advisors, would be the primary rainmaker. Today, that startup has grown to nearly $9 billion in assets under management. I'm speaking with CEO and President Joe Anderson and CFO and Managing Partner Jason Carver from their impressive broadcast studio in San Diego, which is itself a testament to how seriously they take their role as financial educators. Their approach challenges fundamental assumptions about how wealth management firms should operate and scale.
Like you said, we started the firm in 2007. We really didn't bring our first client in until 2008. The vision and the mission of the firm was that we wanted to build a very high-level, comprehensive financial planning platform that we could scale to the mass affluent. We found that individuals looking for good credentialed advice had a tough time finding an advisor that had certain minimums. Like, as you get in the business, you might start at 500,000, then you go to $1 million, $2 million, $3 million, $5 million when you're an independent. And so we thought that there was a real need in that marketplace that could we give high-level, high-touch, comprehensive family office almost advice to that market segment. And so we wanted to build a platform. And secondly, and I think more importantly where my passion lied, is that we wanted to build a real career path for the certified financial planner. In my tenure, you see a lot of advisors not necessarily make it in this business. They're not really great salespeople. They don't have maybe the right networks. And so we wanted to build a career track where the firm itself would be the rainmaker. The firm would provide the marketing, the business development activities. And so advisors could join our firm and just deliver really good comprehensive advice. So that was the mission and the vision when we started the firm in 2007. We started with 3 advisors, and we just filled them up, one client, one advisor at a time. Like you said, I think today we sit at about 9.1, 9.2 billion, 60 advisors with about 6,000, 7,000 clients. So it's been a cool ride.
I want to dive into all of those things
Sure.
because I think that you don't often hear that founding story, right? Particularly having an intentional desire from day one to scale to the mass affluent. Even today, it's 2025. Most advisory firms are looking to continue to go up market. It's one of the challenges that we're solving for our clients often is how do I go from high net worth to ultra high net worth for reasons that we understand, right? When you're thinking about how advisory firms are built and the economic model behind it, you understand it. You didn't do that at Pure. You started with that intentional focus on scaling to the mass affluent. Did you have experience with that, Joe? Like, did you guys know at the beginning how to build that platform, what it was going to look like from a tech perspective, operations perspective, like the type of platform that you would need to be able to do that profitably?
No. To be totally honest with you, I think there's flaws in the marketplace itself, in the profession. You see a lot of RIAs don't necessarily grow because a lot of advisors, there's different stages in an advisor's life cycle. Once they get to a certain book of business, it's like growing a practice is very difficult to do, right? You're significantly underpaid and you're overworked for the first 5-10 years in the business, and then it's like, okay, now I can calm down a little bit, have a little work-life balance, and I make a pretty good income, and now I'm just servicing my clients. And I think that's why all these advisors just want to continue to go up market. Why do I want to bring on 10, 15, 20, 30 more clients at $1 million a piece when I can bring on 2 or 3 new clients at $5 or $10 million? It's a lot less work, and the compensation is roughly the same depending on what that fee cycle is. And so I think in the industry itself, you see organic growth is almost zero or negative in a lot of firms because why would they want to continue to grow when they already have a very successful practice?